I have an idea, I turn it into a product of some sort, I put it into the market faster than the other guys. That's how startups win 9 times out of 10.
Good evening, everyone, and welcome to tonight's Business Model Canvas Entrepreneurship 101 lecture with Mark Zimmerman, one of our team members here at Mars, who has watched the distribution lecture from, I guess, would be 2 years ago now, so maybe not that many that Mark Zimmerman did. You want to see that? We got a loyal follower. So Mark Zimmerman has previously in the past given our distribution lecture. He did a really fantastic presentation that I saw on Business Model Canvas to a different group. So I wanted to steal him and switch him over to a new lecture because I think he does a really great job explaining business model and the Business Model Canvas. By way of his experience, he has worked for big companies like Bell and AT&T, but he's also worked for a number of startups, including Netcom, NextAir, which was sold to RIM, and Connected In, which was actually a client of Mars. So he's been working in the information and communication technology industry for more than 15 years, and he's been on the big company side, but also on the entrepreneurial side. So Mark is the CIO of Mars, as well as being an advisor in our ICE practice. So he uses his experience to help Mars clients in the areas of B2B enterprise software and SaaS business models, as well as in security and privacy. So with that, we welcome Mark Zimmerman.
Thank you so much for coming today and for giving me your attention. I'm going to talk to you today about something that I'm really passionate about, a tool that I have found in our advisory work at Mars is potentially transformative for entrepreneurs. It's really an exciting topic that I'm very thrilled to be able to present to you. So it's called the Business Model Canvas. And I thought I'd start, because I'm a technology guy, and I've been a technology guy since the 90s, it's de rigueur that I give you a Dilbert cartoon. So as requested, I wrote the business plan to show profitability by year 3. There's an armored car going to crash through the wall and spill money on us, and don't stand where the comet is assumed to strike. I had the privilege of working with an entrepreneur who teaches now at the Richard Ivey School of Business, a guy named Ron Close, who used to say when we were writing business plans together, this is where the miracle happens. In the chart that you have, miracle happens here on your business plan. And that's one of the flaws of the traditional business plan. I think next week, at our next session, Veronica Latinsky is going to talk to you about the business plan, the traditional business plan, the sort of the 192 pages of unchanging, unlikely to be updated document that you write for venture capitalists or that you write for your banks and those kinds of things. Business Model Canvas is not that. Your sole advantage as a startup in winning against the competition, in winning against the bigger companies, the better funded companies, the more experienced, more better armed, better equipped, the ones who have the customers already, is speed through this cycle process, right? Through, I have an idea, I turn it into a product of some sort, I put it into the market, I learn something, and I cycle through that loop faster than the other guys. That's how startups win 9 times out of 10. And the Business Model Canvas is a tool that hopefully will help you cycle through that loop faster. That's its mission. That's why I think it's such a potentially important tool for you as entrepreneurs. This is the alternative. 20-some inches of business plan. How many have written a business plan? How many of you, once you wrote the business plan, looked at it again? Sort of dusted it off and updated it when the assumptions changed? How many of you are lying? This is a process, at least in my experience. You write the business plan, you go out into the world, you test those assumptions, and maybe annually, you go back and you dust it off and you say, okay, we thought the market was this. We thought we're going to be small business people from 1 to 5 employees. Turned out to be 5 to 8. Turned out that we thought they were in this vertical. Turned out they were in that vertical. It's very rare in my experience working with entrepreneurs as an advisor here, as a board member of startups, that those documents are living documents. And as entrepreneurs, you need a way to keep track of all of the things that change. And almost always in a business plan, in my experience, 9 out of 10 of those pages are wrong. They're not uninformed. They were smart things when you wrote them. They were the right facts and evidence at the time, but they didn't survive collisions with the real world. Business plans don't tend to be updated. And so we hope that the business model canvas is a tool that's lightweight enough, that it's sort of deep enough that it captures all of the important things about your business, but it's lightweight enough that it doesn't present significant barriers to updating and keeping it live and keeping it as a breathing document. So let me walk you through the piece parts of it in a little bit of detail, and we'll go from there. So these are the structures. There's 9 boxes on that page. It's deliberately one page. Alexander Osterwalder, who is the fellow who came up with this model, evolved out of a PhD thesis that he wrote, very deliberately kept this to one page. The sizes of the boxes are important and are deliberate. They're intended to instill discipline about the amount of content, about the relative importance of those things as you go through them. And so they're very deliberate, and let's look at each of them in turn. Very first one is your customers. The whole reason we have a business is to serve some kind of customer segment. So this box is, who do you serve? Who are you for? Right in this, in this segment on the page, who you're for. And ideally, have you guys talked about customer segmentation yet? Have you talked about target markets? Has that been a topic that's been covered here? No? All right. So I obviously won't dive into that in any significant detail this evening, but important that segment be actionable. I was talking earlier about in updating a business plan. It's small business. A small business is not an actionable segment. A small business that's 1 to 5 people who have this pain, who are in this vertical. You need them to be addressable, and you need them to be self-referencing. Sort of people who say, hey, that's someone like me, so that I can market to them in bunches. So who do you serve? Who is your product or service or solution for is the first box here. And what problem do you solve for them is the second box that generally you fill out in this model. So what are you doing? What problem are you solving? Another way to think about that is, how many are familiar with Clayton Christensen? He has a model very worth digging into, a number of books that are worth reading. And he has a mental model of what job do you do for the customer? What are they hiring you to do for them? Probably the most famous analogy for that is nobody buys a drill. People buy holes, right? I mean, it's holes that you want, not drills. I want a 1/8 inch hole, not a 1/8 inch drill bit. So what job are you solving is what you want to write in here in the what job do you do part of this model. Next thing is channels. How do customers find you? How do they know about the product that you are offering is the next question. And that's also about, hey, once I found out about it, how do I buy it? And those can be 2 different things, of course. You can market market on television and then fulfill that product delivery in a website or in a retail environment. And then how do you deliver the product? Again, that can be a third answer to that question. But all of them are channel questions. All of them are things that need to show up in your channel part of your model. What type of relationship do you have with the end customer is the next thing that we want to capture on this document. And relationships with customers vary wildly. I have a very transactional relationship with my gas station. I'm not in love with Esso. I don't refer my friends. It's not something that I would say I have a deep relationship with. I ideally want to get in and out of that relationship as quickly as possible. I have a very different relationship with my local coffee shop. It's a much more intimate relationship. It's an organization that I'm passionate about and that I would tell my friends about. And both of those are valid business answers, from a business model perspective to the question. You don't need to in every business aspire to be somebody that the customer loves or is particularly attached to. It's the right relationship for me to have a transactional relationship with some of my suppliers. So think hard in your business model about what type of relationship you aspire to have with your customer base. better figure out a revenue stream. Where does the cash register go in the business that you're thinking about as the next thing on your canvas is box 5. Lots of business school colleagues of mine and folks that I see say this is box 1. In the vast majority of startups, I think it's the most important thing is to think about value creation first, and then think about where value capture goes. So I think that's an outmoded mode of thinking, and I think it being the 5th box is the right answer to this question. But don't be surprised if you use the business model canvas to communicate to investors or to board members and so on that they want to talk about this box first. Resist the urge to let them take you in that direction first. The next thing is, what things do I have to do in order to fulfill that value proposition? What are the key activities for my business? And this is not meant to, and it's deliberately a small box. This is not every activity. The fact that you need office, it doesn't go in this box. The fact that you need phones doesn't go in this box. The fact that you need an office administrator doesn't go in this box. These are the essential activities to delivering the value proposition. What are the absolute key activities on this list? And if you've got more than 3 or 4 in that box, think harder. Narrow this down. This is meant to be a startup. You're resource constrained. You need to think really deliberately about what's going to go in this box before writing it in there. What things must you do? Sorry, a build that I missed there. Next thing, your key resources. What resources do you need to execute on those activities? And they are only the resources, again, that you need to do the activities that you must do. Not every person, not every dollar, not every part of the business model. What are the essential ones? What are the differentiated ones? What are the ones, one test that I use often for technology startups is to say, if your CTO went away, then this is a technology business. They belong in that box, in the key resource box, if that's true. If your key developer goes away and the business continues, then they're not a key resource. They don't belong in that business. These are the essential things in the box. Key partners, what else or who else do you need to make the model work? What other partners, what other suppliers, what other relationships, what other contracts do you need in order to deliver the value proposition? So those are the boxes there. And then the last one, of course, is what do all these things cost? What does it cost me to operate this business? What are the costs of those key resources? And we're interested in not so much, again, every cost item, but which are the key levers? Which are the ones where these costs scale as my business scales? So if you're making widgets, these are the costs that come off of your gross margin, that come off of the business as it scales. They're the ones that are levers in your profitability, not every cost again, not the beginning costs. So altogether, those things aim to answer these questions. Who am I serving? What am I doing for them? How am I doing it? And of course, why am I doing it? Why being the difference between the revenue stream and the cost structure is the why you're here. It's that one minus that one equals the reason that your business is built. And how many of you have social purpose businesses or are thinking about double bottom lines, triple bottom lines rather, for your business? So totally appropriate and works equally well on this model to add on the bottom of it, where these are important to your model, the social and environmental costs and the social and environmental benefits as as an overlay or as an additional set of columns on that cost structure and revenue stream. And we've seen some great business model innovation in that area that is pretty easy to capture in a model like this. So that's the framework. I've gone very fast through the framework on purpose because I want to walk you through a very quick case study of a business, and then I want to show it to you in the canvas. I think it will make a whole lot more sense if you see an actual business than if I talk to the blank boxes. So bear with me while I set a little context about a business, and then we'll go from there. So how many people know what those are? All right, those are Nespresso capsules. And the one person who saw my distribution lecture knows that this is a particular favorite case study of mine for pivot, for sort of the changing your business model as you go along. So those are Nespresso capsules. That's a Nespresso machine. How many of you own one of those? How many of you have drunk one, been and had Nespresso coffee? Cool. All right, so I think this will be a fairly relatable example for you as you think about a startup. So this thing was invented in 1970. The Nespresso capsule was invented. Took them a while to perfect it. Once they had it perfected, they patented it in 1976. And in 1986, they launched the product, sold it to restaurants and offices. And the idea was, don't buy any equipment. Don't buy the capital. Pay us by the glass. Pay 50 cents per cup of coffee that is sold in your restaurant. And the thought process or the value proposition was training staff how to make a good espresso was difficult. Stocking the stuff was difficult. Cleaning the machines was difficult. Let us simplify this stuff. We'll save your waiter or waitress 3 minutes in the process. They'll be more efficient. We'll get the people through the restaurant, and this will work really well. This was the value proposition that Nespresso went to market with. 1988, a couple years into that experiment, they said, not working so good. Really not happy about this. The only thing that kept them from shutting the business down is they'd made a lot of capsules. And they thought, okay, well, we'll go until, we'll continue this experiment until we run out of capsules. We'll stop the production line. We'll stop making more. But we might as well try and sell the ones we got. And in the course of that process, they put a person in charge of it from the organization named J.P. Gilliard, and he said, I'm not accepting this. The job that they gave him was, sort of manage this thing until we shut it down, and then sell the assets and see what you can get for the factories, for the machines, for the IP. And he said, no, I'm going to try something else. And the brainstorm that he had was separate the machine and the capsules. Take those things and think of them as solving different jobs for the consumer. He said, we're going to forget about being in the machine business. We're not good at this. It's not our core strength. We're a coffee company. We're good at making coffee, finding it, roasting it, creating the beans. But we're going to outsource the making and servicing of the machines. We're also not going to sell them. We were selling them directly. We had a sales force. We were going to all of those stores. We're not going to do that. We're going to put them in high street kind of retail stores and let the Hudson's Bay Company sell them instead of us. The manufacturers, the Philipses of the world, who were the first guys that they convinced to take on this model with them, are going to manufacture it. They're going to worry about stocking it. They'd had a lot of problems with, hey, we don't know how to keep these things on the shelves. They sold well in some stores. They sold awfully in others, and they had inventory problems. The only thing we're going to keep control of in the machine part of the business is the training of the salespeople. That we're going to make sure that they know how to create a proper espresso. And in an espresso machine, that's not a difficult job. If you can push the button, you can achieve this. But we're going to make sure that they understand the messages around that pushing of the button and that they do that well. The capsules, though, we're going to sell those. Those are our business. In fact, we're going to forbid the retailers from selling them. They can give them away. We'll give you a starter pack in the initial model with the machine, but you can't go buy more there. You can't buy more at the store. Not allowed. The only way you're going to buy more is by joining our club. You're going to get an espresso card. We're going to make you part of the club. And we're going to deliver these things initially over the phone and then later online. And we're going to commit initially to delivering them within 24 hours to you. So you're not likely going to be out of coffee. If you can't sort of gauge how many capsules you have within 24 hours, that's probably your problem, not our problem. So that was the decision that they took. As the market matured, they expanded a little bit on that business model. They added their own brand machines, not made by them. They didn't decide, hey, we're going to get into the manufacturing business. But they did sort of say, hey, we're going to stick our logo on it. We're going to take on some of the design parts of this process. They also added their own stores. Any of you been to the Bay's got an espresso store here in Toronto, so they decided to create sort of stores within stores to do that. Really in an effort to control the sales message more, to have greater control of that sales message. And ultimately they said, we weren't wrong about the office market being a viable channel for us or a viable place, viable customer segment for us, but we were wrong about how we sold to that market. So they revisited the topic and said, we're going to create the Nespresso Pro channel and go back at that office market, but go back at it with our new business approach. It turned out pretty well. The pivot was a blinding success. 30% CAGR is compound annual growth rate. So over 10 years, every year they grew 30% on the year before. And the first year, that's pretty easy to do. Start from zero. The first year you get infinite growth. You get a freebie there, and then in year two, growing 30% on, hey, I did 100,000 to do 130,000, okay. But as the numbers get big, keeping up a 30% compound annual growth rate is a very, very hard thing to do. Carrie mentioned I worked at BCE once upon a time, and when you have an $8 billion bottom line, 3% growth is victory. So 30% is very, very, very hard to do. They do about $3 billion in annual revenue through this model. So not only are the percentages good, the top line dollars are pretty good from that perspective. They've sold 12 million machines so far, so that worked out pretty well too. 20 billion capsules. I've been looking for, and if there's an engineering student or someone who's good at these kind of math problems in the audience, I'd love to know. I want to sort of figure out, 20 billion capsules. You've seen these statistics where people say that's as much money as goes to the moon and back. Like, I'd like to know how far 20 billion capsules, travels. But it's a long distance. It's an impressive statistic. It's available in 50 countries. And so I think we can all say that pivot was a wild success for that company. From, hey, we're going to shut it down to 20 billion capsules sold. Everybody familiar with that term when I say the pivot? Have you talked about that at all? The sort of pivoting my business model. So this to me is a real classic example of the pivot. We didn't change everything about the product. We just changed a few essentials about its business model, and everything changed. Those sort of quick, or rather not quick, but sort of those relatively simple on the surface changes in how it's delivered made a stunning impact in the outcomes. So let me walk you through Nespresso on the business model canvas, and I think this will hopefully sort of make the canvas alive for you. So the initial customer segment, high-end households. I was talking about the segments being addressable. This wasn't for middle class. The initial target was we're going to target an upper class kind of market. We're going to aim directly. It's aspirational. It's got sort of that kind of branding around it. We're going to make this a bit of a fashion statement to have one of these things that is a bit of a status symbol in the initial thing. All of that stems from saying, hey, we have a laser-like focus on a particular customer segment, right? They're addressable, they're nameable, you can describe them. If any of you are web developers or computer science students, think of this as the persona. We have a persona of the customer. This is the person for whom we're building this product, and often a useful exercise to go as far as giving that customer segment a name, to say this is Sally and she graduated from Yale and she lives here and she drives this and she does these things, and to make that as sort of a mental image that you can conjure as a marketer when you're thinking about that customer segment and say, okay, I intuit what that segment likes. So high-end households to begin. What was the promise? The value proposition here is really simple. And simple is good in value propositions. The crisper you can make this, the more succinct and the more easy to understand, the better. So the value proposition is simple. Restaurant quality espresso at home. I think, sort of coffee has gone through a transformation over the last 10 years, and the bar has been raised on what a good cup of coffee is. But at the start of this process, this was revolutionary. Sort of the only, if you were going to make high-end espresso at home, you bought a machine, you hoped that it had the right number of bars. It was a very complicated process, and this was simple. High-end restaurant quality espresso at home without a lot of work is probably the subtext of that question. So if you can't fit your value proposition on one of these Post-its, keep thinking about it. Keep narrowing it down. Keep refining it. Shorter and pithier is better for this job. And that brings up a point that I didn't call out when I put up the canvas in the first place. There's software to do this. There's keynote templates. There's a whole lot of ways to, sort of tools to make doing the business model canvas simpler. In my opinion, the best answer to this question, though, is a whiteboard and a bunch of Post-it notes. That the simpler answer to this question is the better one for this purpose. Because at least at the beginning of your startup, you're going to be changing it a lot, and the less sort of mental resistance you have to hitting recalc on your thinking about this, the better. You want to be able to say, okay, we went out, we talked to a couple of customers, we thought it was high-end households. They said, no, we're buying some other machine. The butler's making my espresso. I don't need one of these things. It's a different target audience. We're going to change. And you want to adapt this document to reflect those changes in as close to real time as you can. You want to reflect these things in real time. One of the other fantastic things about this as a tool in an entrepreneurial environment in a startup is, how many of you are part of a startup team? How many have a co-founder, a partner? This is an amazing vehicle to communicate learning to your co-founders. One of you is building the product, doing the research, doing those kinds of things. Someone else is out interviewing customers and so on. You come back and you say, oh, you know what? I learned this, and I update the board. And instantly, that communication is, sort of real there. People understand the change that you've made. Or if they don't, there's this big yellow Post-it note that says, I better ask, Jim about why he changed that one. It prompts a communication that a piece of software or a set of PowerPoints just don't. And so I encourage you to take some whiteboard space and do it in that kind of manner. So it's a high-end restaurant quality espresso at home. The relationship here is important. The relationship that Nespresso aims to strike with me is, I'm a member of their club, right? Rightly or wrongly, whether that's something you aspire to or don't aspire to, the goal that they are trying to wrap around it is that you say, yeah, I'm a card-carrying member of the Nespresso tribe, right? I've signed up. I'm in this relationship. So it's not a transactional relationship. Member is the word they use to describe it, and that's a very deliberate part of that customer relationship definition. The channels, to begin with, you buy the machines at retail, you buy them now in boutiques, and the second part, you buy the capsules on a website and a call center. And one of the other things that's worth doing here is, as your business evolves, or as the segments evolve, color code these things. It's unlikely you're going to start with, hey, high-end households are my customer segment, but over time that business evolves, it morphs, and so on. And it's not to say sometimes you'll abandon that starting segment, but sometimes you'll add new segments. And add blue Post-its for the next segment, add green ones for the third segment, and so on. Allow you to convey that. And I should have color-coded the Nespresso.com and the boutiques as another answer to that. Revenue streams. Capsule sales is underlined there because that's where all the money is. The money for them is almost exclusively in the capsules, in the sales. Not so much at a top line revenue, but at a gross margin basis. They run the machines at very close to break even, and the profits are all in signing me up as a member of the club and letting me regularly order those things. So capsule sales is the important one. Hardware sales, a smaller one, and there's just some easy ways to indicate emphasis there by underlining the ones that are material to your business and capturing the other ones smaller. What resources do you need to execute on that Nespresso business model? I'd say the very first one is distribution. Probably the most important thing that you have to do if you're going to a mail order business model, and you're doing this, more than 20, almost 20 years ago now. You're making that change. You better be darn good at logistics in terms of how am I going to stock the right number of things, have them close enough to my customers to get them inside of 24 hours, make sure that the delivery costs are very low because I'm selling. It's high-end coffee, but it's still coffee. This is a 60-cent or thereabouts a capsule kind of a thing. So if it costs me $6 to deliver them, better rethink this. I got to be very careful about what those costs are. I need the patents, I need the intellectual property, the idea, and the protection that goes around it. I need to make them, simple enough. And over time, I need to build up a brand. I need to build up a brand promise that makes there's 12 million of those machines sold. The first one was probably really hard to sell. 11,909,000, anyway, the 12 millionth one, probably pretty easy. So it's driven really there by that brand promise. And over time, that brand makes their communications and messaging and all of those things much, much more efficient for them. Key activities. I was talking about, on this part of the chart, only the ones that make or break the business. And I think in this case, these are them. You need to be very, very efficient about producing these things, getting the quantities of them right in the logistics part of that business. Making sure that we have the right number, that slippage of those things is minimized. I was talking at the beginning in 1998 or 1988 when they were thinking about shutting this down. The only reason they kept it open is because they had too many on the shelf. Having too many on the shelf in this model kills the economics of it, right? You need to balance the amount of inventory you have with the delivery commitments that you're trying to make. And of course, you have to be really good at marketing. There isn't, at the end of the day, much fundamental difference between my hot water and ground up coffee and your hot water and ground up coffee. That's, the degree, the range of differentiation there is relatively narrow. And so you have to be very good at marketing to execute against that differentiation. Who are the key partners? I'd say the only key partner, lots of partners in this model, but the only one that was essential to its initial success was getting the OEMs to agree to take that leap of faith that said, all right, yeah, I'm going to make your machines even though I see none of the downstream profits, even though I'm only sort of, I'm making a one-time sale, you're making a transactional sale. And doing that after having burned many of those OEMs on the first business model, right? Hey, we were wrong about this for 18 years and change, and but this time, trust us, we're gonna get it right, and convincing those OEM partners to go down this path with them, a very essential part of of making that pivot. Last thing on this chart in terms of the important elements of this kind of model is the distribution and sales element. You got to be, that's a big cost for this business. It's not only a key component, it's a key driver of the P&L of that business. You guys done financial statements yet or talked about profit and loss statements? So when you get there, these kinds of things are the big parts of this kind of model. Marketing, next part, is a big cost. You not only have to be good at it, you have to spend a fair amount of money at it to do this. The long-term sort of payback of this kind of model is potentially, the marketing spend, the cost of customer acquisition being something that you got to pay a lot of attention to. And then last, I got to make these things. I got to manufacture them. So that's the Nespresso business model on the canvas. Does that make sense? That kind of pretty clear. That grind, take that home. Once you've got this on a single canvas, sort of your initial hypotheses about this, because to me, and I hope to all of you, a startup is a successful startup anyway is a learning machine. Its job is to go in quest for the right answers to these set of questions, to the business model questions for that particular entrepreneur, that particular idea. So once you've got an initial hypothesis here, this tool becomes even more powerful. It starts with document hypothesis number one. How many of you have a business idea that you're working on? So if you go home this evening or the next time you spare an hour to work on your business and write this down, fill out your business model canvas. That's often a very clarifying process for an entrepreneur to sort of write down in one of these things. Here's what we think today. But it becomes even more useful when you say, okay, now take this page, and which one of these things am I sure about? Which one of these things am I certain about in my business model? How many of you are sure you've nailed your customer segment? All right, so not most of you. A handful of the people who said, hey, I have a business idea are sure about that answer. So, circle this thing and say, all right, the next week I'm going to spend getting to truth about that customer segment. I'm going to go out, I'm going to talk to customers, I'm going to interview them, I'm going to speak with them, and I'm going to come back and either I'm right or wrong about that hypothesis of that box on the chart. I've nailed that hypothesis. Move on to the next box. Move on to the value proposition, and those are often iterative. The value proposition is the value proposition for this segment, right? It's not the value proposition in the abstract. It's the value proposition for the high-end household. So test the pair next. Test the value proposition against the particular customer segment, and so on through this model. And one of the great things about this model, I was talking about putting it on a whiteboard. Take the picture of the whiteboard example, because there will be instances for sure where you say, okay, we changed. We said we didn't think that was our customer segment. We pivoted here, and oops, 2 steps downstream, we were wrong, and let's go back and and revisit the version that we looked at before. But this is has anyone read Eric Ries's The Lean Startup book? All right. Forget doing your canvas. Next thing you should do is go read The Lean Startup. Anyway, this is a tremendous work in this space and sort of the science of entrepreneurship. One of the things that he has developed and modeled is what he calls innovation accounting. And what he means is sort of fundamentally is tracking the amount of startup investment, the amount of your founder energy, if you will, that you devote to get to a given piece of learning, right? And that the more efficient you can be about that, the faster you can learn with the resources that you have, and the more likely you are to win. This is a great tool for innovation accounting, for keeping track of, I ran this experiment, I learned this thing, and now I update. I ran this experiment, I learned this thing, now I update. And cycling through that loop, the loop that I showed you at the very beginning there, is critical to success, in my opinion, as a startup. The other thing that this is great for is talking to other people about your business idea. One of the key success factors for you, I suspect, as entrepreneurs is finding the co-founder. I asked you earlier, how many of you are in teams working on your idea? this is almost always a team sport. At least successful entrepreneurship is statistically a team sport. And so, you want to convince me to join your team, to get on the page with you as an entrepreneur. Don't send me your business plan. Please don't send me 192 pages of, hey, this is my idea. I wish you would come and, join my team or give me your opinion or so on. Take this page. Sit down with that person who you're trying to convince, that you have got the next great entrepreneurial venture, and walk her through this page, right? It's a tremendous tool for very succinctly going through that kind of process and communicating it to team members and so on. Last job, and hopefully my excitement for this tool has shone through, but the last thing that it's great for is when you're a little farther along and you're hiring new staff. You got new people joining your team. Another thing that's hugely correlated with entrepreneurial success is getting those team members on the same page with you as fast as you can, so they understand the vision of the company, where it's trying to go, what matters to it, what's essential to our success. What's on these are the things we must do. These are the things we sweat and worry about nights about, and these are the things that as long as we're okay at that, we're fine. This is a really crisp tool for communicating that to team members. Once you are a little farther along on this kind of model, where say 2/3 of the boxes are no longer guesses. Hey, they're slightly validated. They mostly make sense. They've survived sort of collisions with the real world, with customers. One last thing that you can do with it is you can make this visual. You can make this a reference document that lives in your, in your startup, in your offices, in your, in all the places where customers and employees, shareholders, all the people who sort of are part of making your brand or your business a reality, that we can turn it into a visual representation. And then this communicates even more crisply. If you didn't read the words, you didn't know all those things, those pictures with, as a reference are really powerful. To say, hey, here's our business model on one page. We know what it is. It's coffee at home. It's to these kind of people. They're sitting in front of this TV. Their relationship is this kind of membership. It's a club. I think all of those things really sing when you take them and you turn them into graphics. I'd encourage you not to do that until you got a reasonable amount of certainty, unless you're as talented as some of the folks who do the scribing here. But if you're as graphically challenged as I am, don't do this until you're a little farther along, because it'll stop me. It certainly stopped me from changing the segment. I can't change the segment. I got this beautiful picture, but you want to minimize that. So that's that's really the messages I was hoping to convey to you about the business model canvas. A couple of further learning kind of things. I hope I've intrigued you about this tool. I haven't done it justice at all in terms of the power of it and the depth of thinking that sits behind it. But I'd encourage you to go get Alexander Osterwell and Yves Penier's book, The Business Model Generation. It's not only very worthwhile from a reading perspective, it's a beautiful book. Aesthetically and sort of the processes they went through, it's really quite worth looking at, even if you didn't read it. Though I hope you'll do both. The second part of second part of my next steps for you would be to read Running Lean by Ash Mora. We've been lucky enough to have Ash up here a couple of times at Mars doing workshops with us and so on. And he's taken the business model canvas, which is a general tool. I mean, Nespresso is not a small company. You can model it in it. I've seen lots of case studies of big, stable enterprises in it. He's adapted it and modified it a little bit specifically for the challenges of a startup, for a venture where your canvas is mostly blank, or at least the facts on your canvas are mostly unknown. He's done a great job of adapting the canvas to that particular challenge, and for writing a sort of a guidebook that goes along with it about prioritizing the questions and how to frame those experiments to get to to certainty, or at least much less uncertainty about each of the boxes on your business model. The last thing I hope you'll do is come back to our Entrepreneurs Toolkit workshops about the business model canvas and fill one out for your entrepreneurial idea. We have some in January, and we also have the same session in May coming up. And they are really great workshops. Sit down with fellow entrepreneurs and whiteboards and markers, and do this for your business with some really effective coaching as you go through it. So I hope you'll take those next steps. Thank you very much for your time and attention, and for coming to Entrepreneurship 101.
Thanks, Mark. We have a couple questions that came through actually earlier in your presentation from the webcast, and I think there's some confusion for when to use the business model canvas and when to use a business plan. So, for example, one of the questions was, is the completed business model canvas a document that you should actually give or distribute to investors?
I think it depends on who your investors are, or who the potential investors that you are pitching this to. I doubt the Royal Bank is going to give you a small business loan on the basis of your business model canvas. There are lots of angel investors I know who will happily accept a pitch deck and a business model canvas as the right answer to telling me your business model story. They likely want a set of financials. There's two parts to the formal business plan. Generally, there's the prose part about that, the long sentences about my guess times my wild guess times my assumption, and then there's a set of spreadsheets. And every investor I know wants the spreadsheets. Most of them are really not interested in the prose part of that. And this is an effective substitute for the prose for angel investors in Series A, sort of early stage money. It probably doesn't work when you're downstream or if you went to a bank. But in either case, it's the right tool for worst case scenario. You have to write the business plan. This is the table of contents for the business plan, right? These are the headings. These are the thoughts. This is the outline, if you will, of my business plan. And then yes, I got to be a little more long-winded about it in my business plan. I got to cite a few examples. I got to get a McKinsey report and something from StatsCan. But this to me is the right tool when you're in that experimental stage.
And I think if you have a business plan, it sort of sits on your drive or unprinted somewhere, whereas a business model canvas, you can just put it up. And it is, as Mark mentioned, a living document, so you can sort of see how things have changed. It's almost like a visual reminder for your team of what the original plan is, and it can morph over time. Are there any questions from the audience? If you go up to the mics, that would be great, because we have about 100 people on the webcast, so they can hear you better.
Hi, great presentation, thank you. I was just curious, in your experience going through the business canvas models with a variety of clients, have you found any shortcomings with this tool?
There are things in the tool that I think in startup situations actually that the lean canvas is often a better answer, and the reason I think it's sort of my go-to tool is the missing on here is defensibility of those things. Is probably the one thing in a startup case that I don't see. I mean, it's embedded in the model, but it isn't called out with the prominence that I think it deserves in a startup situation. And that can either be, hey, we have intellectual property that nobody else can take. We have a particular depth of knowledge of the customer segment. And so sort of where the secret sauce goes on the business model canvas isn't immediately obvious. And I think the lean canvas does a better job of that. But most important to me is that you pick a tool that works, for you. I don't think the tools are particularly important. It's doing it in an open, iterative kind of process with your team that matters. What format you put it in, to me, is a much less important question.
Jackie from the webcast asked a question about Nespresso. She says that it's a great example of pivoting, And can you give us more details on how Expresso's management figured out that the office market was the right customer segment for them to target? Did they figure that out sort of a la Steve Blank's customer discovery approach of getting outside the building and talking to partners, or was it just a fluke or serendipity?
So I think they didn't target the office market. They abandoned the office market to go to the home market largely. I don't know in the case study, and it's a great question, sort of why they picked the office market in the first place. What the thinking was and what research they did to originally pick the segment that they ultimately chose to abandon. And I'm interested in digging into that. The sort of the pivot or the new segment was certainly predates the formal thinking that goes into Steve's customer discovery process. But they did hold focus groups and in other parts of sort of customer research, though not in the formal kind of customer discovery way. So I think learning from customers, but probably in a less efficient, more luck kind of way than Steve would argue for. Go ahead, please.
Mark, about this canvas, I find it very general. Because there are something key features like you need to know the competitors, competitor analysis, and the key differentiators, and how do we customize and localize a product?
Well, so a couple of those I'm aligned with, and a couple of them I'm not. Let me give you the ones where I think it's important and where I think they're less important. I have yet to see a startup killed by the competition. That almost always startups die or fail or don't get the elevation that they aspire to for some other reason. It's not to say you don't need to be aware of the competition, you don't need to know who they are, you don't need to know their value propositions, and in fact, it can be an interesting exercise to do one of these for the bad guys. To say, all right, what do I think the other guy's canvas looks like, what the other team's canvas looks like. But I think entrepreneurs, sort of when they're in the analysis stage, tend to overestimate the importance of the competition. And so I think it's a good thing that it's not a prominent feature on this model. It's not to say you shouldn't think about it, but I think it's way less important than the other parts. I think your key differentiator better be expressible in your value proposition, or it enables your value proposition depending on, whatever it is. And so I think the key differentiators are captured on the model if you've completed the canvas well.
Thanks.
You bet.
Hi, that was a great presentation. Thank you. What I take away from it is that the business model canvas is a great way, on the one hand, to invite and remind people with a startup idea to consider all of these various factors.
Yes.
And also it's a great way to maintain a kind of high-level view of the different elements. My question is whether you have any insight on evaluation strategies for a business model as expressed in the canvas, whether it be like some kind of narrative on how to traverse that canvas to see if it's robust or any
You mean valuation in the sense of, is this a good idea?
That's right. Yeah.
No, I mean, I think it's a great tool to communicate what the idea is. I don't think you can sort of, directly extrapolate from the canvas, is that a good idea? I think the way you get from this is what the idea is it a good idea, is by validating each of the things on the canvas, right? It's saying, okay, I know it's a good idea because I was right about the customer segment, and that customer segment is big enough to achieve whatever my business objectives are. I was right about the value proposition. I went out and tested it with customers, and they said, yes, if you deliver that, I will give you money. I validated that I can build it at a price that makes my spreadsheets work in the cost structure. I validated that I can sign contracts with the partners on that idea. But I think judgment about is this a good idea or a bad idea at the idea stage, difficult to, there's no no set path through the canvas to say, is this the right one? I think if you're trying to disrupt an established market, you'd look at it one way. If you're trying to be lower cost, a low cost competitor in another, you'd look at it a different way. So I think it really depends on what the thesis of the business is, and the tool just lets you communicate that thesis. Sorry, go ahead, please.
Hi, hi, Mark. Quick question. So you recommended updating this canvas as much as possible. So my question is, in that process of updating and comparing, I guess, initial business canvas that you have and taking advice or criticisms and things like this of your original visionary plan,
Yes.
What's some advice for incorporating, and I guess it relates back to that previous question, but advice for being self-critical about these things that you do put on the business canvas?
Well, I think it's important that you are objective about the things that you put on the canvas to begin with, to the best of all of us as entrepreneurs. Part of the reason that you go down an entrepreneurial thing is because you see something that's that other people don't see. So that needs to be captured in the canvas to begin with. But over time, I would only change it when you've run some kind of experiment that says this should be changed. And I'd encourage you to try and structure your learning about your startup in that way. I have a hypothesis, and it's a falsifiable hypothesis, right? That says my chosen customer segment are the let's say the 1 to 3 person very small startups. These are the people I'm going to sell this to. I went out and talked to 15 of them, and I gave them my value proposition, and they all say, not so much. Go change that. Right, and the level of subjectivity in those experiments will vary a lot. And this is not a to 0.2 decimals of precision. There's lots of judgment here, but sort of the bias is let customer facts change those things rather than, certainly don't let advisor opinion or sort of sway you. Let it nudge you to create an experiment to test that thing. But if take that advisor's piece of advice and go test it in the world, and then update your canvas would be my general heuristic for that.
Thank you.
You bet.
Just in the interest of time, we'll take one more question, and then you guys that stood up, if you don't mind, we'll give you first chance with Mark after to ask your question privately. Cool. Sorry about that. Thanks.
Not a problem. With a business plan, it almost seems, as you're building the business, that it's death by minutia. You said 192-page or whatever. Is the real guts of doing this exercise being able to take an entrepreneur who is right at the lowest point at various stages of developing this business and being able to give them that one jolt first thing in the morning and say, okay, there's a reason why I'm doing all this. I can see it all on one page, and I know it's going to be changing along the way, but this is the reason why I'm an entrepreneur in the first place.
I do think that's a big part of it. I think the tool is useful for a lot of things, but I think certainly one of its jobs is exactly that as entrepreneurs, well, as people, but as entrepreneurs particularly, we focus on a particular part of the startup equation generally. I am a declared product guy. I care about the thing we're making. I care really less about who's buying it and so on. If I had my druthers, I'd just get to make stuff, and the rest of it would be okay. And that's not a right way to run a business. And this gets you out of your particular comfort zone and says it's the sum total of these parts that make a business that wins, right? It's the interplay of that model that wins. And sales and marketing person similarly, I care about the messaging. I don't care really what it costs to make. And same thing, jolt you out of that comfort zone. So I think that's a very powerful part of the tool's value. Thank you.
Thanks, Mark, for your great presentation on Business Model Canvas. If we had a competition for the sexiest slides ever presented at Entrepreneurship 101, I think your slides would have won that. So thanks very much.
Thank you.